Greetings, Dr. Jeffrey Scott, and this is my weekend market update for June 29th, 2025. I titled this one Markets Reach or Reaching New Highs. Do divergences suggest cracks are forming? Again, it's June 29th, 2025. I'm doing this before 9 a.m. on Sunday, so no futures out to give us too much visibility. Email address is marketmripro@gmail.com. Consider joining my Google groups at Top Down Trader. Um, Over the last couple of days, we've done a couple of education programs. Uh, First one was sort of the rationale between my software product, Market MRI Pro, and how I designed it to help me find great setups. And then yesterday, we had a really nice session where I just spent 2 hours in the program. If you're interested in Market MRI Pro, and that's a tool that I'll be using today, stick around. But in the upfront PowerPoint, I actually have a special July 4th offer for you. And wait to see some of the new functionality that we added this weekend. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate my tools of top-down investing and how I use them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades, and I have tools for multiple platforms, but am an independent trader. If you're looking for the stocks and docs wealth charts video, I still do that. I do it pretty much Monday mornings, and I've just been traveling so much and so busy, I've limited to once a week, but I'll put that out sometime before the morning on Monday. My Google group is basically my mailing list. It's an opportunity for you to communicate with each other, to communicate with me, and I do a lot of things that I don't post on YouTube, and I always place them in my Google group. It's free, plus you get discounts on my stuff, so free is good. And you can see, just go to Google Groups, sign in with your Google ID, find Top Down Trader, and you'll be in business. I always ask the question, will we have a recession in our near future? And the answer is always the same. We always have a recession in our future. I just don't think it's very near. If you look at the 10 minus 3 month or the 10 minus 2 year yield curve, the gray bars are recessions. The black line is the zero line. And you'll notice that sometime after each inversion of the yield curve, we get a recession on both of these. So it would be kind of arrogant of me to say, no, we'll never get a recession. But the timing is very variable, and it occurs after you normalize. So, yeah, I think we'll get a recession. Do we get one late 25 if they don't start cutting in time and the tariffs take play? Does some surprise hit in 26? No one knows when that recession is coming. Does the AI tech revolution eliminate recessions? I doubt that. But until you see it, you don't have it. And I know why it's important. And if you haven't traded during a recession, a bear market in a recession is very different than a bear market in a strong economy. Things that might give us a clue is we could look for a spike in the high yield index options adjusted spread. We don't see that. We could look for a big slowdown in economic activity below minus 20, and the last one was at minus 4. So I don't think we've got a recession imminent. Know your earnings dates and news. I would call this week's news as jobs, jobs, jobs. If we want a Fed cut in July, then you're looking for a miss to the downside on the jobs. If you want to stay status quo and think the economy is still working, which would be great, frankly, then meeting numbers is probably a good thing. I doubt we have big beats to the upside. So you got your job openings on Tuesday, ADP employment, private side on Wednesday, and claims, U.S. employment reports, wages, etc. on Thursday. Some factory orders, ISM, and then obviously short week with the July 4th holiday. On the earnings front, kind of a very minimal earnings week. And I like to say it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Many years ago, I owned Greenbrier. I don't now, but I always looked at that as the beginning of the next series. So we'll have some earnings. I think the numbers are going to start to increase on the earnings. Leaders index, this is something I like to put together at tops. I typically do an exercise at meetings, and we had a meeting here. We put together a list of the leaders at that time, and we looked for a break of that list. And we've had a pullback, but a nice orderly pullback into the 17, and it actually has come up a little bit. Right now, I'd say the leaders index is not broken. The purpose is in a lot of major markets that I've been in, run-ups, the leaders break before the market breaks. Now, my Market MRI Pro is not an indicator. I have indicators, but the Market MRI Pro is what I call a trading app. It's a self-contained system. It requires the purchase and maintenance of multiple licenses. But you don't necessarily build it 100% from scratch. You have to have DevOps tools, different modules you can acquire from different sources, and then you got to have the data to build it. And then ongoing, it's a data feed, it's a server farm, it's the support. But the best part is, Praveen and I meet almost every day. We talk about things that we see in the marketplace, things that we feature sets, and he builds them. So we have total control of the user interface and the workflow. And when people that own the program have a great idea, I can add it in there. Indicators are great from a sales perspective in that you code once and you forget them. Platform changes if TradeStation goes 64-bit. God, what a dream that would be. We may have to do some work on it, but on our indicators. But for the most part, you code them and you forget them. No ongoing server costs, software licenses, and not a lot of support. So Market MRI Pro, I get a lot of questions about it. It's expensive. I know it's expensive. Now, those that don't really know me personally will think I'm BSing you, but I think I own every product in the market. And why? Because I've been doing this for 30 years, and I'm a sucker. And I buy a lot of things I don't end up using. $19.99 is the base price. It includes not only Market MRI Pro, it includes a complete set of my indicators for TradingView. And the way the program is built is you can flip between one and the other, and the equity will open up, or whatever you're looking at in TradingView, with your last workspace, so you could have the same indicator set on both. Why do we do that? That was asked to me this weekend when I did some education. It was because there are a lot of things that we're not going to code, a lot of proprietary things that you might use. Most of that is in TradingView, and this way you can combine them. So you can get up to $800 off for July 4th, and let me show you how that breaks down. If you don't know me from Adam, never bought anything from me, it's $300 off for July 4th. If you just sign up for the top-down trading group, it's another 100. So if you just do that, you get it for $15.99 for the first year. If you've bought my Wealth Charts Marketplace package, you just have to send me a picture of the CAT scanner. That'll get you another 200 off. Or if you bought the TradeStation application, my TradeStation application, not TradeStation, take me a picture of my app, you'll get another $200 off. So it's really designed to drop it as much as $11.99. If you subsequently buy one of my other packages, you'll get a discount for owning this. So I call them stacking discounts. I've got so many things that I buy from the same person. I just try and give you a little bit of extra discount if you do. Each of the products I have a different programmer partner, and that's why they're priced separately. Now, starting in year 2, the price will be either $5.99 at the max, probably lower, depends on how many I sell. All I'm looking for is to spread out my cost of data and support. And if I have a lot of users, then it'll be probably $4.99. Outside educators are coming. First one's done. We'll make an announcement there, but it's one of my good friends. If you follow me for a long time, you probably can figure out who that is. And for those that were on this weekend, I jinxed myself, and he beat me last night at cards. Of course, he distracted me, but we won't go there. And then lastly, we're committed let me just back up. There are a lot of programs that people have bought over the years where they pay a lot of money up front, and then after 3 or 4 years, the program disappears. Two of them that I did, one's called Magenta Trader, and one was called Best Choice Software. And they had a business model where you would pay $5,000 or $10,000 up front for a lifetime subscription, and then you could pay a little bit extra money for lifetime data. Well, if you do that model, it's great, in my opinion, as the purchaser. You buy once, you use forever. But if you're the proprietor and you don't have revenue coming in, you ultimately can't keep your business up. And so that's why we split it this way. There's no lifetime purchase. Um, However, I am very aware of what happens when the people leave and you're stuck with a product that doesn't work. So what we've done is we have committed to building an API into at least one other data provider that you can get independent of us, and that will allow you to have the product work even if we were gone. And I will cut your annual fee to 300 if you have your own data. And this will probably happen next year on the API. Another thing I sell is I have a lot of computers. So I'm sitting in my home office with 11 computers running. All of them are gaming laptops. All of them are pretty late model. My wife has given me the evil eye to sell some. So the first two I'm going to put out there is an X1 Flip. It's a current model i9 Core 2 Ultra HP, not 3K memory, a 3K screen. It's got a great screen, 3-year warranty, purchase 1220, 1600 bucks, 2 terabytes of SSD. And then for real gamers, a 14th gen i9 4K screen, NVIDIA 4090, 2 terabyte SSD, MSI 16-inch, also purchased in December. If you have any interest, just drop me a note. I have this problem. I haven't seen a new notebook that I didn't buy in a decade. For more information, Market MRI Pro customer support, or for questions about the program, coding at Market MRI Pro. If you want to talk to me, it's marketmripro@gmail.com. If you have interest in buying, you send me an email, tell me what you own of mine. Go join Top Down Trader, and I'll send you an invoice at the price and get you started. Now, a special announcement, and we opened to the initial batch of purchasers March 2025. I needed 20 people to break it. And what do I mean by break it? I've been using it for quite some time, but I wanted to have more people so I could see where I had issues. We didn't break it, but we had to add more servers and strengthen our data feed. We've added more features like seasonality, which I'll show you today. So in appreciation of the early adopters, I'm resetting everybody's start date if you are a current owner of the product to July 1st, which means if you bought it in March, you got April, May, and June for free. I'm just doing that as thank you for supporting my launch. All right, time for the charts. Oh, one last thing, and I'd like some feedback on this. John Person's going to have a meeting in Florida, one of my good friends, and they just announced it, and we were together last night talking about whether I should come in as well. Now, I believe the meeting is going to be Friday the 24th and Saturday the 25th. I would add an additional day on the 26th and potentially the 27th, depending upon how many people want to do both meetings or just a meeting with me. So if you could give me some feedback through either Top Down Trader or email or in the remarks section, if you're interested in coming to a live meeting in South Florida in October, would you do both meetings? Would you do just my meeting? And 1 day or 2 day? And that'll give me some insight, and I'm going to make a decision in the next week or so about how I want to hold that. Thanks again. And I know this was long-winded. I apologize, but let's jump into the program. If you want those videos that I did this week, just reach out to me at marketmripro.com. If you're a top-down trader group, you already got them in an email. So we ended the week on Friday. Decent market. It was stronger, then it came back some. You could see here that the indices figured a little bit above the midline of their day. Diamonds led up 0.91, spiders 0.46, Qs 0.34, and the Russell lagged at 0.03, at least on Friday. Bitcoin was down a bit on Friday, volatility was down, and the dollar was up a bit. Now, when you look at it over 5 days, you can see what a strong week we had, ranging from 4% up on the Qs over 5 days to 3% on the Russell. That's a super strong week. Over here, you can see we're starting to get double-digit numbers on new high, new lows on the NYSE and the NASDAQ. What we're looking for is at different time frames, the total number of new highs versus new lows at those time frames. I want this in triple digits to get excited, but this is the highest on the NASDAQ that we've seen in some time. Bull markets are built on new highs, not new lows. If we look at the one-day change of the S&P 500 sectors, we could see a pretty mixed day in the market despite the high indices, with energy, healthcare, and interestingly technology lagging. Discretionary communications industrials were leading. Down here on the themes, you could see defense, leisure and entertainment, Dow Internet, millennial consumers, home construction, which is sort of surprising, retail, robotics, infrastructure, robots, cloud, kind of growth stock related. And no surprise the Qs were leading. Over the 5-day, just look here, you can see communication, technology, and discretionary led on the week. Energy lagged, and the strength was in copper, semiconductors, AI, solar, interesting, lithium, robots, blockchain, and clean tech. Over here is really a secret weapon. It looks at 3 different indices. I've asked Praveen to build a 4th, which will be the Russell. In blue or green, it shows you the current trading day. Gray would be the prior trading day. It shows you what percent of sectors were up. Most of them were up on both days. Industries a little bit less were up on Friday than Thursday in the S&P 1500, and 59% of the stocks were up. So a little bit better than 50-50 day. A similar pattern here on the NASDAQ, but only 43% of stocks were up. And again, less positive on the sectors on the NYSE and industry groups, and 53% of the stocks were up. So very much on the broader markets, a 50-50 session. This thing will update real time. You just have to click that during the day, and it updates in about a 3 to 5 count. 1, 2, see, before I can even get to the numbers, it updated. I do have a real-time data feed. We don't stream it for costs and the different requirements that we'd have to do that. This is where I put on one monitor for monitoring during the day. I have a timing model. The timing model has been bullish now for multiple weeks. You can see the green lines here. And we took out all-time highs on the spiders. Woohoo, woohoo. Isn't that awesome? We took out all-time highs on the Qs. We are nowhere close on the Russell, and we got a little ways to go on the diamonds. Most importantly, the timing model says we're long. I look at the weekly for the dominant trend. I look at the daily for the short-term trend, and you can see green here as well. So daily up, weekly up, that says we should be long. I'm not shorting up here. I am raising cash a little bit because I do that at all-time highs, especially when I see some divergences, which I'll point out in the next few minutes. If we look at the USA major indexes here, a little bit more information. Let's blow it up. And this, by the way, is that Market MRI Pro tool that I talked about. Here is the spiders. And you could see here's the prior all-time high. We closed above it on the daily and on the weekly. Our high-low jump is at 78, so it's not excessive. Now, something new, and I'm just curious if this will add. I'm not sure if he set it up to add on this layout or not, so let's just take a look. We have a seasonality. It may not work on this. Oh, it does, so this might be interesting. So let's look at seasonality. Let's attach it to the end of the chart, so that would be today. And let's just look at 10-year seasonality on the S&P 500 here. And you know, if you think about the term sell in May and go away, it kind of looks like seasonality here is pretty darn strong. This is 10-year seasonality, which looks at each day what the average performance was over the last 10 years. So seasonality is actually strong here as well. So this is the spider taking out all-time highs. Not a whole lot of activity here. OBV is above moving average. That looks very bullish to me. So that is the spider. Here are the Qs. Now these are individual charts, so I'll have to add the seasonality to every one of them. And to do that, you just go to indicators. And if you want 3 seasonality lines, you can have 3. If you want 5, you can have 5. I only want 1. So I double click there. That should add it. Now, right now, it's showing what the year's seasonality looks like. Well, I more care about where we're going. So what it's going to do is it's going to take this line and add it to the top there. So I do that by hitting configuration. I go down here and I change that to 10 years. And let's look at today, which means just adds it to today, hits OK, takes a second to do, and you can see seasonality on the Qs is pretty strong here as well. Well, that's exciting. Yeah, July is not a bad month historically in the market. July, and then you get into August, which may be different. So let's take a look at this. On the Qs, looks like the prior highs, let's put a horizontal line at the prior number. So we had a double top there. Let's move that up a little bit. We have taken out this area here of resistance. Very bullish. Again, the same comments. I've raised a little bit of cash here because I'm going to show you some divergences. Let's go take a look at the diamonds. Let's raise it, make it bigger. Short term, the diamonds look tough, don't they? Man, they look good. Look at how this thing has run up this trend line so beautifully. Now, where are the diamonds going to end up? Well, the diamonds, I like trend lines, probably to the point of obnoxiousness. Did we just break out of I don't know, a wedge pop there? That would be cool, wouldn't it? I don't know if we did or we didn't. I'm just drawing the lines. Bottom line is the all-time highs. Let's put a horizontal. We got to get up here for all-time highs. So we still got a ways to go. And let's throw on seasonality, which I showed you already how we do that. This is going to be a long video today, I can already tell. Double click, turn that off, and let's go into the configuration file. Let's go down to 10 years, just today, which means it adds it to the end of today's bar. And you can see on the diamonds, we also have some strong seasonality coming into the chart. Anything bad on this chart? No. And then we have the Russell. This has been the weak sister, but it's trying to do something that it failed at before. And it'll be very interesting to see what it does here at the 200. And that might be telling. When we were right here, I actually said if we break above and hold, I think that says good things for the market. I think I'd say the same thing again. Can we break above the 200? It looks like let's see, we closed at, we put this here, look at 215.48, and the 200 is it's 215.60. I can't, at 215.68. So we're still technically below the 200. I think that's going to be very telling. Let's look at seasonality on the Russell. Now once I add it, it'll be here tomorrow. It'll be here next time. I only have to do this once unless I want to change. The little gear is the configuration. Let's go down here. Let's find 10 years. I think that's plenty. And let's look at daily. Let's hit OK. And let's look at, again, positive seasonality. So I think the indices all look the same except the Russell's lagging at or near all-time highs. Look like they want to go higher. And thus far, I haven't shown you anything to be concerned about. If we make this smaller, we take a quick look at volatility. You'd expect it to be down, bouncing at 1632. It's certainly down in its pattern, down 1%. The dollar is just failing this trend line multiple times. As long as it stays below that, it's probably supportive of stocks. It was up a bit. If we look at commodities, the risk is back on stocks. The geopolitical risk is lower. Hence, gold has broken down. Just still not far off prior highs, down 1.8. Silver holding up is maybe a little bit better, closer to highs, but still down over 2%. Oil is back down to the 200, was down a little bit, 0.5%. Natural gas still dead to me as it struggles here with its 200-day moving average. And then the 10-year rallied some, it opened higher, traded lower, and closed up on the session. And if we just highlight it, it looks like it was up 0.5%. Same pattern on the 30-year, and it was up 0.46. I think as long as the 30-year stays below 5%, the markets are fine. Markets don't like rapid increases, as we saw here, and they don't like it when we stick above 5%. That's been pretty clear from watching. The buckets on the Russell and anything I'm breaking down the Russell is not going to work today because our data vendor has an issue. Hence, so much fun of being an app provider. But the buckets give me a visualization of where most of the stocks are in the marketplace. You have more above the Bollinger Bands on all of these, but you don't have any more above the midline of the Bollinger Bands. I'm sorry, but you have no excessive bullish or bearishness. I'd say those are neutral. The market breadth tool, looking here at the NASDAQ composite on the right, the NYSE composite on the left. You had good volume on the NYSE, and I think the NASDAQ was higher than average a little bit as well. There were some options expiring. Both of them are at closing at all-time highs or look like all-time highs. I'd have to go back and see, but I believe they're both at all-time highs. Let's put a line at the highest high here. I don't have lines here. So the highest high here was at 2332.50, and yeah, 2435. So it looks like we're at highest highs there. The Nasdaq Composite. I think the Nasdaq Composite, was it there or just off of it? I think we did hit it this week. So lots of all-time highs. You can see we came off the highs, closed in the middle, a little bit of a topping tail. I don't like that, but we'll wait for more information. Up here, pretty strong close on the Nasdaq. Now, these are stocks above the 50 in white, above the 20 in green, and the 200 on red. You clearly have, whichever one I look at, above the 20 lower, above the 50 short-term lower, despite higher highs. That's a divergence in my book. And the same thing is here, where as the market's gone up, you've gone down on these. So the number of participating stocks at new highs has gone down as we push. That's one divergence we'll look at. Down here you have bangos. These are the opposite of the baby out with the bathwater. It's we're buying everything. No down signal here. Again, nothing here that says the market has to end, but we do see that what I talked about with divergences on the multiple time frame charts. Now, when we look at RSIs, which is down here, the AD lines on the SP 500 look strong, higher highs, but we're not making higher highs on the RSI, so there's a divergence on the S&P. On the NASDAQ Composite, the AD line looks horrible, despite the fact we're up at either at or near all-time highs. It looks like we're at all-time highs. And from an RSI perspective, you are kind of not breaking a new high here, so more divergences. On the S&P 1500, again, you got a flat line here. I mean, if I drew a line at the top, you're not setting a new high on the RSI, but you are on price. And so I think we have a lot of divergences sitting here. Okay, so summary of the market. Wow, I love all-time highs, don't you? My portfolio's happy. I'm sure yours is happy as well. I'd rather see less divergence because that means we're not broadening out as much. I think the market goes higher. I think seasonality is in our favor. A pause to refresh at all-time highs would not be unusual, but I think right now the most likely path is to go higher, and we'll continue to watch those divergences. Now let's look at the sectors. To do that, I look at some ratio charts here, and the ratio charts will pop up right now. And this shows me how strong communications was this week. Netflix is crazy good. You can see technology is another big leader. And even though sometimes you'll have some strength in the defensive plays, staples, utilities, real estate, and healthcare are big laggards. Financials and industrials I put in the neutral category, and materials is weak, and energy is weak. All right, so that's my quick top down of industry groups, of markets and a little bit of sectors. Let's go further. So I go into my JAS layout, and that's where I do the majority of my work. Now, during the day, my radar screen will update on a regular basis. The charts, you have to update them. Once you switch, you'll get the latest chart that, with the latest data. The first one usually takes a little bit of time. Um, I realize that I'm probably slower than yours because I've got this thing here, which is the Caruso FOMO indicator. It does a lot of calculations. I've also added seasonality to the chart, as I'll show you. So basically, I use the JAS list. You can use whatever list you want. And I use a list that combines the NASDAQ, the NYSE, and the Amex and looks for stocks that have at least $1 and 100,000 shares. Because this market is so strong, I have the highest number yet, which is 3,913 stocks. If I go into my top-down view, it puts every one of those stocks, as you'll see, is assigned to a sector and industry group. So my sectors and industries here are very big. There's almost 4,000 stocks, which is very different than the 500 in the S&P 500. On the left is sectors, and the right is industry groups. I can pick the top sectors, and then what will happen if I look at just cyclical, which is discretionary, you could see only the ones that are in discretionary pop up, and there's 411 stocks. What I'm going to do here is let's look at ranked the top 10. 1, 2, 3, 4, 5. This one means a new symbol or a data error. We're going to skip that. 6, 7, 8, 9, 10. So the top 10 industry groups in the market have 134 stocks. I'm going to come down here and I'm going to filter them and eliminate stocks below $5 or 500,000 shares. It gets me to 94. So if I am a true top-down investor, which I am, although I do bottoms up as well, which I'll show you, I am looking at the market says to buy. These are the top industry groups, and let's see if there's anything I can find in them. One thing I like to do is just rank these by number of my impulses, and let's look at. You got 2 truckers, you got 3 trucking related stocks in the top 4. That probably should tell me something. So, Old Dominion, well below its 200. Those that know me know I don't love that, but let's look at the right side of the chart. We moved up off the 50, we took out the 17. We had massive volume, we're in an EMS, we had a CPR, volume breakup momentum coming out of a squeeze. Relative strength is either crossed or is about to cross. OBV is strong, and look at seasonality. Pretty darn good right now. I like Old Dominion, so I might want to put that. Oh, you're not going to give me that? Okay. I might want to put that into my buy list. All right. Let's look at Nike. Nike popped up on earnings. Actually, let me go back to ODFL for a second. I want to show you something. If we go up, come on back. All right. We drop this thing down here. It tells me earnings are not to July 23rd. It's had good surprises, even though it had slowing growth. That picture says market expected it to do worse, both on earnings and revenue. Pays a 0.5% dividend. Pays $1 on 50. All right, so it's 0.5%, I guess, 0.59%. Anything else that I would say here? I like to know when the next earnings date is. I'll leave that open for now. If I come over here, I can see the news. Not so great. If I wanted to read that Seeking Alpha story, I click on that. I got to prove I'm a human being. I guess a lot of bots are doing what we just did, which is opening up a story automatically. And let's just let that close. And there's the story. I might want to read about it. But from my perspective, I like what I see. I like the seasonality. Nike popped on earnings. We'll see if earnings have made it into the earnings chart yet. You can leave this up if you want. It will change as the stock changes. And you could see horrible quarter if you look at earnings per share. If you look at earnings per share growth on Nike, but a big surprise. And I think they surprised both on earnings and revenue. they ran up to the 50, and if you look at this, this is we got 5-year seasonality and 10-year seasonality. Now I think I want to change that. So what I'm going to do, just mostly to show you what I'm going to do, is I'm going to go click that. I want to turn that off. There you go. And I want to go into my configuration, and let's make the 10-year a different color. Let's make it gray. See if that shows up. All right, so if we now look at it, 5 and 10-year from here are kind of flat. All right, let's look at CHRW. CH Robinson, I think, and this is another trucking company, and clearly in a downtrend, and I prefer not downtrends, but we're not far away from breaking that trend line. Seasonality here looks strong. The volume was good. They had a CPR, volume breakout momentum from a squeeze. Relative strength about to close. OBV or close above. OBV looks good. I dropped down seasonality, and again, I'm seeing good earnings per share growth. Surprises. This one looks pretty good. It pays a 2.38%. I'd like to see it close above my trend line, or at least trade above it. XPO is a logistics company. I think they might be they're in the same space. So XPO is a much nicer looking chart to me. Why? Because if I was to look at that same type of trend line action, we've broken out of the trend line. We've got strong seasonality. We again got multiple dots, got a volume and a breakout dot. Relative strength and OBV are above, and a nice, beautiful earnings pattern, and you've got to August. TRNR, looks like an IPO. We're going to skip that. Frankly, it looks like a mess, so I don't know what that is. TLN, ooh, Talon Energy. What is an energy stock doing? I guess it's a utility stock. I wonder if they do electricity and data centers. We don't have seasonality on that. That would suggest to me that when I do a monthly chart, it's got a limited amount of time. It does. Okay. So this has been a huge mover. I don't know about them. I wonder if they're not doing data center energy. So let's just open up the news. Nuclear. Ah, that's why. Open up Seeking Alpha, an electric company with new. Again, I think it's great that you have the ability now to open this up. You don't have to pay for any of the new services that we give you. So Talon, it's had a big run, no seasonality because it's new. Expeditors, I believe, is another in the trucking industry. Let's take a look at that. Seasonality is good. Got to break above that 200. Doesn't look as good perhaps as some of the others. Up here, again, earnings, August 5th, 1.3% dividend, good quarter over quarter changes. And this 805 $1.22 will be compared to the $1.24 of 2024. So I think this is as good a implementation of top down as you'll find. I love it. I use it constantly, and it does update intraday. A number of other ways you can slice it or dice it. I think these trucking stocks are starting to make me wonder that when I see so many up the top, I get interested. Now let's go back to my impulse list, and let me show you another thing I do. I'm going to go drop this down. I'm going to add pullbacks and uptrends. I'm going to take that 2394. It's going to get smaller. 675. I'm once again to rank them by number of up dots. Why up dots? Because we're long this market. We're not short. If I was short the market, I would do it the other way. TIPT, no idea what TIPT is. Let's just take a quick look. Tiptree Financial Services. Are they insurance? Focus on the profits. 13% premium growth. So it's got to be its insurance. All right. Well, insurance companies have been super strong. Seasonality is kind of flattish. It must be an IPO recently that it doesn't have fundamentals, but it's got 5 and 10-year seasonality. So that's bizarre. So I think this is interesting, a big move above the 17. Here's the volume. Was it on earnings? I don't know because I've got no data. CPR, volume breakout momentum from a squeeze, relative strength OBV look great. I'd do some research. We already looked at Old Dominion and Nike. MSCI, I believe, has earnings this week. Let's see. Nope, this one's earnings are out. It's not to July. Financial services, I think they make a bunch of ETFs and stuff. Great seasonality. It'd have to break above the 200 here. Right now, it's failing at the same place here a lot of times. LCFY, no idea who they are or what they do. Let's see what comes up. Locify Communications, cheap stock. Let's keep moving. KTOS is a Kratos, is a defensive stock. Good earnings per share growth. Defense has been hot. This one looks like it might be interesting. Seasonality is nothing special. To me, technicals trump seasonality. I've had 2 big volume days in a row. A breakout above the 17. It's on my watch list. I think it looks pretty good. KTOS. Others that I thought were interesting. DNow, not ServiceNow, but ServiceNow actually looked okay too. Had a big gap up here. Seasonality is nothing special. This is in the energy space. There's your XPO again. So again, this is one of my preferred ways of looking at the market. A big name that made the list here, pull back in an uptrend with 3 bullish dots, was Google. And I think Google, which pretty clear is in a uptrend with higher lows. And if it takes a higher high here, that will confirm it. I like Google right here. Pull back to the 200 and a big move up on Friday on pretty significant volume. Volume breakout momentum, relative strength cross, OBV cross, not extended. So that was another one that I liked. You see the beauty of walking through the market with a very repeatable workflow. Some of the good stocks come to the top. The goal here is to make your life easy. Let's clear my filters. It'll bring us back to the 3900. Let's go to my secret weapon. My secret weapon is this 2-day momentum up. Talked a lot about it in the 2 videos that we did this week, the 2 live meetings. These are stocks that get my special attention. And let me show you my stock of the day. I think the best looking stock of the market right now for me as a buy right here is Amazon. Why? Seasonality, at least over the next couple of weeks, is pretty good. You got Prime coming up. The volume on Friday was great. You had a gap, closing in the upper half of the gap. You had 2 momentum days in a row, and that's what this filter is about. OBV broke above its relative strength and OBV above their moving average. And earnings per share growth is pretty significant. The forward PE is less than all those earnings per share growth multiples. Next earnings are now to August, and you can see the high-low jump is in the 50 range. I think Amazon looked great. Others on this list that I liked, we already looked at Expeditors Unlimited. We already looked at Nike. GTX is auto parts, I believe. Cheaper stock. It's in an uptrend. Closed above the 50. Kind of flat looking seasonality, great volume. Earnings are already out. Something's going on. What was the news on Friday? Best momentum stock to buy for June 27th. Okay. And best value stocks. How can you be both? That's got to be something. But that Garrett Motion looks interesting. Again, I don't know this company from Adam. It makes money. I like to see that. It's got earnings per share growth. It's got, plus minus revenue growth, but had a huge quarter back there. Seasonality is neutral. This one looked good, and again, it's got the 2 days. And I'm only going to point this one out because my buddy brought up the name yesterday. I don't know if he said he was buying it or not, but SARO, which is another defensive play. And again, you're talking about a stock that's already in an uptrend and breaking out here to recent highs. So it was an IPO back in October, so it hasn't taken out the IPO highs. So I won't have seasonality on it. I do have a little bit of fundamentals. I think this one looks good as well. So let's think about my favorites. Google and Amazon for sure. Those truckers, something's going on there. And what I don't understand, I'm just going to end on, I got a couple more things. I'm not ending yet. Sorry. It's all right. I'm not at an hour yet. Everything says home builders are doing horrible and should go down. Yet, when I looked at home builders, they all look like this. Or they don't, not exactly like this, but they all look like they're turning around. And seasonality is strong. Are they already pricing in rate cuts? I see all these headlines that say how bad the home building is. What about KB Homes? That was Toll Brothers. Here's KB Homes. Now, a little bit less exciting, I agree. But it's not going down anymore. It's going sideways, despite what we're hearing. Let's look at Lennar. And maybe Toll Brothers looks different because they go for a higher segment. Look, they've stopped going down. I think that's my point. And Toll Brothers intrigued me. All right, lastly, let me just show you what we brought out for seasonality. It's included in the program. Instead of paying $5,000 or $10,000 like I did in the past. So we've built it so you could pick how many years you're looking for, 10, 20, or 30. I like looking at 10 and get too far. I want at least 80% of the time to be positive. I want at least a 10% move. I'm looking seasonality for things I buy next week. And I'm going to hit, I hit the date, and it ran these. And one that looked really interesting is KNSL. It's another insurance company and one that I've been in and out of. Look at the seasonality on KNSL. And let's just go back to my layout. We'll be doing some specific education about the seasonality tool and how to maximize it. I've got a couple more changes I want to make before I do that. But that was launched this morning. So if you have my product, you got it. This is a big move here. Something I'll be watching. And the fundies, look at the earnings per share this insurance company is producing. From $1 to $2 to $3 to $4. Insurance companies have been strong for a while. All right, everybody, have an awesome rest of the Sunday. Hope you have a safe holiday, whatever you do for 4th of July, the weekend. I'm sure I'll be out on my boat somewhere. And I mean, just lastly, if you are interested in Market MRI Pro, I do have a special price. It's never going to be lower than this. Gosh, I should have killed that already. I'm sorry that this thing is stuck here. I forgot. I got to kill it here. There it goes. And now when I open up the slide, it will be gone. But you'll get up to $800 off the $19.99 price, depending on if you bought stuff. The minimum you'll get off is $400 as long as you do top-down trader. It's good through July 11th. And if you want more information, just reach out to me at marketmripro@gmail.com. Again, safe, healthy, happy. We'll see you next week or maybe Monday.